News Talk 94.5 WPTI, 96.7 FM WTOB. You're listening to the Wealth Guardians Show with Doug, Brice, and Garrett, helping you retire the job and keep the paycheck. In the studio this morning, you have Brice, Payne, and Garrett Ray. And this morning, we're talking about a couple of different things. We're talking about key things you need to know regarding your 2025 taxes. I know we just got done paying 2024, but here's what you got to look forward to 25.
Is that happening again?
It happens every year, Brice.
Really?
Yep. And then the other segment we're talking about in the second segment is what are people actually concerned about as they approach their retirement? What are advisors hearing? Good morning, Brice.
Good morning, Garrett. How you doing?
I'm doing okay, sir.
Good. Let's. We got a couple of good topics here. Let's go ahead and do our Wealth Guardians Service Salute, as we like to do every week. We just want to take a moment and acknowledge and express our appreciation of the men and women in uniform out there, our first responders who do what they have to do. Oftentimes it's a thankless job. And we just want to make sure that you understand that you are appreciated here from the Wealth Guardians perspective, and to your families as well, because they participate in that sacrifice just as much as you do. So thank you very much for that. And let's go ahead, and before we jump into the meat of the subject, Garrett, we have a little question we're going to ask ourselves here to better get to know your Wealth Guardians financial planner. It's a twofold question this time.
Okay. What
was a fear you had as a kid that you've grown out of? And then what was a fear that you had as a kid that you haven't grown out of?
A fear that I have grown out of is when I was younger, I used to be very afraid of very loud noises. So
okay.
Like the hand drying machine in bathrooms that would make like a loud noise, sometimes vacuum cleaners.
Yeah.
Certainly, I remember my grandfather took me to a NASCAR race one time. I only lasted like maybe 10 minutes.
You sure that's not an excuse for you not to wash your hands or vacuum?
I don't know about that. I know the loud noise thing was a no-go for me until, I guess I'd turn like 7 or 8. Now,
what about one that you haven't grown out of?
I guess I sort of do. When I was younger, there was a neighborhood dog that was just absolutely terrifying. And he started kind of running after me and that sort of thing. And even in my adult life, if I've been like on a run around the neighborhood and I've had dogs chase me before, and I absolutely hate that.
I see that.
If you got a dog, people, control your friggin' dog.
All right. Well, if I ask myself that, what was a fear that I had as a kid that I have grown out of? It was snakes. I used to not like snakes. Now snakes do not bother me in the least bit.
Yeah.
In fact, I even had a hero moment one time when my daughter was taking horse riding lessons in a corral with about 8 other kids. There was a snake that was crossing through part of the corral, and the instructors were getting all the kids on the horses over to one side because they didn't want the horses to get spooked or whatnot. They were just sitting there waiting for the snake to leave the corral, and he was just kind of hanging out there. I was like, well, this is never going to happen. So I just walked over there and picked up the snake by the tail and walked it over to the edge of the corral and threw him. Walked over the edge of the corral and tossed him on the other side there. Okay. I think I got a few hero points with that. So that was one that I did grow out of, but one that I haven't, heights.
Okay.
Still do not like heights. Picture of my daughter standing at the top of the Sears Tower, on that platform thing that's all glass.
With the glass floor.
You wouldn't get me anywhere close to the 10th floor of the Sears Tower, let alone up at the very top. All right. Well, anyway, you ask yourselves that question too. Do you guys out there have any fears that you have grown out of? What about any fears that you haven't grown out of? That's just what we do to help you relate to us and understand that we here at the Wealth Guardians are real people with fears just like everybody else out there.
Fair enough.
All right. Well, let's go ahead and get into this first one. It's about taxes. And I know the tax season is done unless you've filed an extension, as some people do. But there's some changes for 2025 that were a little different than 2024. We thought we'd just take a minute or two in this first segment and go over that, just so you have an understanding of how Uncle Sam changes the game a little bit every year. So, Garrett, what's one of those first ones that are different here?
Yeah, so the IRS try as they may, they try to do inflation-based adjustments for our income tax brackets, and as that also involves your standard deduction, which most people, the way the tax laws are written now, enjoy the standard deduction. So for 2024, if you were filing jointly, a married couple, it was $29,200.
So that's changed now.
Yep, that has gone by the wayside. And so looking forward into 2025, when you file next year, you get $30,000 even. So
$30,000. All right.
Yeah, so they went up,
$800.
$800 for you. Yep.
Okay.
If you're single out there, it was $14,600 in 2024, and then in 2025, how about an even $15,000? So there we go.
All right, very good. Well, that's the first one. If you're just tuning in, you're listening to the Wealth Guardian Show with Doug Ray in the studio this morning. It's Garrett Ray and myself, Brice Payne, just going over with you in this first segment some of the changes that we're looking at taxes now that we're in the 2025 season, and that we're putting 2024 behind us. We've paid what we owe there, hopefully. And so just talking about some of the changes here. And Garrett, the next one we'll talk about here is taxpayers 65 and older. They can add an additional standard deduction. For 2024, it's $1,950 for single filers, or head of households, it's $1,550.
Yep.
That's interesting because in 2025 now, not much of an increase, but it is an increase.
Yep, it is an increase.
$50.
Yeah, and it's an additional amount that you get on your standard deduction just simply by being 65 or older.
Had that I was never really aware that there was a standard deduction increase just for being over 65.
Yeah, I can't remember the exact year that came into play, but obviously the intent there is to try and help our senior citizens with a little bit more tax deduction, and when they're likely on some amount of fixed income, at least, be that Social Security or some sort of pension, just to try and get their dollar to stretch a little bit further.
Yeah.
When that went into place, I couldn't say.
I feel like I certainly should have known that. I mean, I know what the standard deduction is, but I guess I didn't realize there was.
Well, you're not 65 years old.
I'm not, but I work with people who are over 65. Probably should have been aware of that. Our software takes care of a lot of that for us. All right, so there's that one. Now, what's the next one that we've got, Gary? 401ks, right?
Yeah, so 401ks. So for those of you who are plugging away at that 401k, number one, good on you. But you can invest more. So this is good. So you can now invest $23,500 in 2025. This is up from the 2024 number of $23,000 even.
Okay.
So an additional $500 going into that 401k if you're looking to max it out.
And now here's something that is new to 2025 altogether.
Yeah. So your catch-up contributions are increased. So for employees who are age 50 and older, and that may be a lot of the listeners out there, you can contribute an additional $7,500. So that means your total contribution, $23,500 for folks who are younger than 50, you get to add $7,500 on top of that. So $31,000 total towards your 401k contributions in 2025.
Now that one's standard. Here's the new one.
Here's the new one. So an even higher or a super catch-up is allowed for employees who are in this narrow window between age 60 and 63 of an $11,250 on top of that original $23,500. So the total amount, if you are out there and you're working, you have a 401k, and you're between the ages of 60 and 63, in 2025, you can put $34,750 total towards your 401k.
Yeah, that's, we keep a list of all of the years, the ages going into retirement. There's like age 60 is the, 62 is when you can file for Social Security for the first time. 65 is when you're Medicare. So there's all these years. This just here, added about 2 new ones for us.
Yeah. And it's all, this is all good news for the listeners out there. If you're in a situation where, maybe you're getting ready to just turn 60, or you're certainly at least above age 50, you've got some advantages out there in the tax law that work in your favor. Just by simply knowing them, you can contribute more than what you maybe did when you were age 49 or 59.
Exactly. Yep. This is probably a good time to mention. We had we're doing the Social Security workshop now for people who want to get approaching Social Security age or retirement age and want to understand how all the filing nuances of Social Security are. So we have a seminar a couple of times a year. We just did that this last Thursday, and we have another one coming up this Tuesday, and that's the 29th at 6:30 in Clemens. There's a lot of intermingling between taxes and Social Security that if you're aware of one, you probably want to be aware of some of the other nuances and the other subjects. So that's why we do a taxes in retirement seminar a couple times a year, and we do a Social Security updates seminar a couple times a year. And so, if you're interested, if you haven't filed for Social Security yet, and you're thinking, hey, I'm approaching that age, and I probably want to do this the right way. Brice and Garrett are always talking about these nuances of filing. I don't want to do it the wrong way. Well, there's no cost or obligation to attend our seminar. You just got to give us a call or go online and register so that we know that you're coming. So how do you do that? You can go to our website, thewealthguardians.com, and click the events tab and just enter your information there so that we know that you're coming. Or you can pick up the phone if you want to talk to Lynn, pick up the phone and give us a call. She'll answer 336-391-3409. She'll take down your information, and that way we know we've got a seat ready for you. Again, no cost or obligation, and there's a lot of solid, helpful information in our seminars that allow you to better understand why it is you might want to file one way versus another way. It's a lot more complicated than just, I retired on this day, I'm filing for Social Security on this day. There we go. Let's go ahead and get through one or two more of these ones real quick here, Garrett. The next one is the IRA contribution limit. Now, that stayed the same. No change to that. $7,000 a year with an additional $1,000 for those who are 50 and older. There is no super catch-up at age 60 for an IRA. When they brought that into effect, they only brought that in for 401ks, 403bs.
Yep.
Employer-sponsored plans.
Exactly. And the IRA has got no love in 2025. Absolutely nothing changed.
How about that? All right. And then the last one here is HSA contributions. So those limits went up. In 2025, individuals contribute up to $4,300 into an HSA. That's a $150 increase from 2024. And for families, the limit went up to $8,550. That's a $250 increase from last year. And then for those 55 and older, an additional $1,000 catch-up contribution. So it's interesting that for the HSA, the catch-up is at 55, not at 50. Yeah. Like it is for your IRA.
Yeah.
Right. I'll go figure. So anyway, there you go. That's a little bit of a run through for the changes in the tax codes, the tax laws for 2025. Since you just got done paying your taxes in 2024, it's time to look forward to the next year. And we got to go to a break, Gary. You've got a trivia question here.
I do, Brice. So we are currently airing this episode on April 26th.
Yes.
So this is going to be a trivia question on this day in history.
Oh, very good.
Yep. So on this day in history, April 26th, the worst nuclear disaster occurred. Can you name this particular nuclear disaster? And bonus points if you get what year it was.
Okay. All right. Yeah, no problem. All right. Well, stick around for the answer to that trivia question, listening to me get it right on the other side of this quick break. This is Brice Payne with me, Garrett Ray. The show is The Wealth Guardians, helping you retire the job and keep the paycheck. And this is News Talk 94.5 WPTI. And this is 96.7 FM WTOB. News Talk 94.5 WPTI. 96.7 FM WTOB. Welcome back to the Wealth Guardian Show, where we, as always, continue to help you retire the job and keep the paycheck. I'm Brice Payne in the Wealth Guardian studio this morning, along with Garrett Ray. And in the second segment, we're going to change things up from taxes to what people are actually concerned about when they sit down with a financial planner. Now, before we answer this trivia question that Garrett left me with and left you with, I want to ask you this. Are you planning to retire, period? Probably you are. Have you met with a retirement income certified professional who's also a fiduciary? Hopefully you have. But if you have not, I'm going to invite you right here and now to take us up on a complimentary offer to review your current financial situation. So as certified retirement planning specialists, we're going to put together a customized written plan with strategies for portfolio allocation, income distribution, Social Security filing, tax efficiency, also with the additional benefit of often reducing both the risk and fees of your current plan. So if you've put aside at least $400,000 and want to take us up on this no cost, no obligation review, call us at 336-391-3409 or go to thewealthguardians.com. That's thewealthguardians.com to learn more. Let us show you how in black and white to retire the job and keep the paycheck. All right. So let's go back to this trivia question. Mm-hmm. Garrett, so it was on this date. What was the date?
This day in history, April 26th.
Okay.
And on this date, April 26th, the most famous nuclear disaster occurred. I want you to name what that nuclear disaster is, and bonus points if you can get the year.
So it would be Chernobyl.
Chernobyl, that's correct.
And I know where I was when this happened. I'm going to say it was either 84 or 85.
Oh, you're so close. It was 1986.
Was it really?
It was 1986. Yep, 86.
Well, I got the Chernobyl part right. But gosh, I could have sworn.
Chernobyl, you got it right. Yeah, so on this day in history, April 26, 1986, the number 4 reactor in the Chernobyl plant did suffer a meltdown. It's the worst meltdown that we've had in civilian nuclear power, you could say. And it was due to a steam pump failure that basically was the apparatus that maneuvered the control rods.
Right.
So they couldn't get the control rods in place. They're doing some testing on the reactor to see, basically like a max load of the reactor, and they couldn't back out of that mode. And so, yeah. That's what's led to the.
You probably had a few studies on this when you were going through your engineering and whatnot.
A little bit. I mean, I'm not a nuclear engineer, and certainly not with Soviet technology when I was 1 year old. But
it's like oxymoron, Soviet technology.
Yeah, well, I mean, the Soviets were a threat for sure. One could argue they still are. So yeah.
But that was isn't Chernobyl in Ukraine?
It is in Ukraine.
Yeah.
It's a Russian territory, not Soviet Union, but territory back then.
All right. Very good. Well, I got it half right then. Okay. Yep. I definitely knew what it was, just didn't have the year quite down right.
Yep.
All right. So what we're going to be talking about here in the second segment is, as financial planners, Garrett, you and me, we sit down with couple after couple after couple, week in, week out, month in, month out throughout a year. And all of them have their own particular situation, their own particular reason of why they're coming to a financial planner.
Yep.
But we definitely notice some themes or some trends there as far as, hey, yeah, you're in the 50 percentile of people who are coming to us because you have a fear or concern of this or that.
Yep.
And part of our job when we sit down with them during the discovery meeting process, that's the first meeting, is to understand right off the bat, what brings you to us? What is it? What are your fears? What are your concerns? What's keeping you up at night? If this is your vision of what is happening, what you want to happen in retirement, what obstacles do you think are there that might keep that from happening? Yep. So we try to uncover all of that, and this is that's kind of what this is talking about here. And let's go to it. So advisors in this survey said that 52% of clients that seek out a financial advisor are doing so to help them with retirement planning. Okay, well, we're retirement planner advisors, specifically retirement.
Yeah, we're specialists in that. Yep.
So I would say it's a lot higher than 52% for the ones that we have here. I'd probably survey it's like 90%. But 34% are primarily working with someone just to build wealth. That I caught a little bit. That struck me as a little bit interesting.
Yeah, for sure. And it's, and basically the survey was trying to understand, why do people go to a financial advisor, financial planner anyway? And the majority of them are seeking for help with retirement, but there are some out there that are saying, hey, I just want you to grow my wealth or come up with strategies to help grow my wealth. Doing some quick math there, that's 86% of survey respondents. I would imagine the other percentage there that's left over is a very specialized case. Maybe they're going there specifically for some estate planning or some legacy planning.
Yes.
There could be a very, very, and this is a very special kind of area of finance, dealing with like prenuptial agreements or divorce settlements, that sort of thing. There's folks out there that make it their entire focus and practice on that. Very specialized field.
Selling their business, they want to make sure they're doing that the right way.
Yep,
so
absolutely.
A couple different things besides just growth. Of course, portfolio allocation is one thing that a holistic financial planner is going to do, but it goes way beyond that. That's almost just the investment advisor hat that a financial planner will wear. And there are people out there who are just investment advisors, and there are ones who do that very well. Power to them. But a lot of times people want somebody who is well-versed in everything that has to do with finances or money in a household, not just the growth portion of the trying to put yourself in the right investments for growth in the portfolio. What I find interesting is, over the years that I've been in this, is that a lot of people who are ready to retire, who have approached that retirement window, they might not realize this. They do not necessarily need to focus on growth anymore. Yep. And that strikes them as, interesting when they learn that that's not the case. They don't need to be focused on growth, because what have they been focused on for the last 40, 50 years of their life? Growth.
Yeah, growth.
Now all of a sudden they've got somebody who's a financial engineer like you and I are, and we're telling them, hey, you know what? You have done such a good job of saving over the years that no longer needs to be your main focus anymore.
Yep.
Maybe protection or tax mitigation now needs to be your main focus. And that a lot of people have, now that surprises them a little bit.
Or even this, Brice, this always kind of makes me chuckle a little bit. Gosh forbid, a spending plan. How do we spend
a budget?
All of this? Yeah. Because, for so many people, it's such a shock that they go from, hey, I've got this nest egg of money. It's a completely different behavioral change for them to think about spending it.
Yeah.
Yeah, because they've been investing in savings for so long.
Yeah, absolutely. Absolutely. All right, so let's talk about some of the top client concerns here. So surveyed advisors say that their clients' top concerns are this: outliving their assets. So 38% of the people who go to a financial planner, outliving their assets is their main concern. I would say that's definitely, maybe from my point of view, I see it as about 25% of people have that as a concern, maybe 30. So that seems to ring true.
Yeah, I'd say it falls relatively in line with what we see.
Yeah, exactly. The next one would be generating reliable income streams. That 31%. So I'd say that's true. People want to just make sure that they've got the money coming into their checking account as routinely as when they had a paycheck. And that's certainly understandable. Here's one that surprises me. Future stock market crashes. Only 12.5% of people in these surveys, the advisors say only 12.5% say that they see that as a top client concern, future stock market crashes.
Yep.
Gosh, what's your view on that, Garrett? Because I would say for me, I would see about 75% of the people that we see, that's a main concern of theirs.
Yeah, I think, a stock market crash, I could actually believe these numbers just because people aren't concerned about a stock market crash until they see it happening. And then they're paralyzed, right?
That's true. So
it's like, when the market has, 4, 5, 6 steady years of growth, you forget about the last one, right? It's, people have a relatively short memory time frame, I've come to find. I mean, there are some people still out there that are still remember and feel burned, so to speak, by 2008, 2009. But how often does it really come up in conversation? Very much. Not very much anymore. I just don't think it's on people's mind until they're in the throes of it, and then they don't know what to do.
And that's differently. We definitely see that happen. Sure. How about this one? Healthcare costs. Now, advisors say only about 8.5% of the people have expressed healthcare costs as a concern of theirs. I might agree with that to some degree. I think it's a little bit higher than that for me, maybe 20%, 25%. But if we ask ourselves, what percentage of people should be concerned about that?
Yeah.
90.
Yeah, absolutely. This is one of the areas of retirement that people completely overlook. It's a natural defense mechanism, in my opinion. People don't want to think that anything bad medically can happen to them because that's kind of a painful, somewhat morbid conversation to have. Not going to happen to me. No way.
Right.
Well, statistics tell us that it's likely to happen, particularly as we age. And do we have a plan for it? And if you don't have a plan, then guess what is the plan? All of your assets that you will soon be liquidating to pay for those medical costs. So coming up with a specific plan about how do we pay for unexpected or even just gradually increasing medical costs in retirement, something to think about, folks.
Yeah, that is one that exactly as you mentioned it, people have been healthy. They're coming to us at age 60, 65.
Yeah.
They've been healthy their whole life.
Sure.
Why should they be concerned about health issues?
Yep.
It's not something that's ever raised its head before. Well, if our body is a vehicle, that vehicle has only got so many miles on it at some point. No matter how many times you change the oil, it's eventually going to go south. And our bodies, no matter how good we feed ourselves or how good we take care of ourselves, eventually the joints are going to start aching.
You're going to need a tune-up.
You're going to need some, maybe more than a tune-up. Yes. All right.
Yep.
Well, you know what, Garrett, that is all the time that we've got for this. Let's mention real quick that if you heard us say this in the first segment, we're saying it again now. We've got our Social Security seminar. It is this Tuesday, the 29th. If you want to go to that just to learn some nuances about Social Security and what it takes to make sure you're filing the right way, that's why we put on this seminar. There's no cost or obligation to attend, but you do got to pick up the phone and register, 336-391-3409. You can also go to the website, thewealthguardians.com, and click on the events tab. It's in Clemens. It's at 6:30 on Tuesday. we'd sure love to see you there. So pick up the phone and give us a call if you haven't filed for Social Security yet and you know that light is approaching you in the tunnel. At any rate, that's all the time that we've got this week. Thank you for joining us. We hope the rest of your weekend is everything you want it to be. This is Brice Payne along with Garrett Ray. The show's The Wealth Guardians, helping you retire the job and keep the paycheck. And this is News Talk 94.5 WPTI. And this is 96.7 FM WTOB.
Hi, it's Garrett Ray with the Wealth Guardians. Thanks so much for listening to the show. Make sure to check out our weekly series, The Vault, on YouTube. Find our channel, The Wealth Guardians, where we talk about all things retirement planning and cover new topics each week, such as Social Security, tax planning in retirement, and our thoughts on investment best practices, and much more. New episodes air Thursdays at 2 p.m. Make sure to subscribe to the channel so you can get notifications when we release new episodes. We're here to help you retire the job and keep that paycheck. We'll talk soon.